Lehman Brothers panic erupting. Video highlights. Japan's economic crisis. Japan's bond markets are collapsing. The economy faces low growth and high public debt. Retail market appears stable, but underlying issues threaten economic stability. The stock market is often unaware of deeper economic problems. Caution is advised. Loss of creditor status. Japan has lost its status as the world's top creditor for the first time in years. Japan's finance ministry admits to losing control over its monetary system. Analogy: buying your own house to inflate perceived value reflects Japan's situation. Market liquidity concerns. Japan's bond market liquidity has dropped to levels seen during the crisis. Lack of buyers leads to price discovery issues. Government intervention may be necessary. Current liquidity levels indicate potential for another financial crisis. Warnings from financial leaders. Jamie Dimon warns that credit markets may not reflect true risks, citing slower growth and inflation concerns. Economic indicators suggest a recession is likely due to rising prices and lack of liquidity. Market analysis and investor behavior. Overview of market conditions. Discussion on the current state of the market, referencing past events from retail investors are actively buying despite market fears, indicating a trend of buying the dip. Technical analysis shows key levels for Qs and Dow Jones Industrial Average. Gaps need to be filled. Impact of AI on employment. Emphasis on learning to trade with AI tools as job security diminishes in various professions. Warning about potential job losses across multiple sectors due to advancements in AI technology. Example given of how AI can replace traditional roles, such as medical diagnostics. Anecdote about using AI for medical assessments, highlighting its efficiency over human professionals. Discussion on personal health monitoring through technology and its implications for future healthcare practices. Alert: really bad things are about to happen. Video highlights. Stock market insights and economic concerns. The stock market showed significant gains today. Tariff implications on markets. Recent fluctuations in tariffs have created volatility in the stock market. One moment tariffs are imposed, the next they are paused. This pause in tariffs is set until July, raising questions about future economic stability and strategy. Broader economic implications. As more money is diverted from consumer spending to debt repayment, challenges arise for those unable to secure loans or rentals due to damaged credit ratings stemming from delinquencies. Current real estate trends. Discussion on whether it's a good time to buy a house, especially for those not needing to sell. The speaker suggests there are significant opportunities in the real estate market. Anticipation of a major shift in both commercial and residential real estate markets, with potential for increased sales as conditions change. Concern over short-term rental markets, particularly Airbnb, which are reportedly struggling. Many homeowners face financial strain from multiple mortgages without rental income. Commentary on geopolitical tensions involving Russia and the US, with Trump warning Putin about consequences while expressing skepticism about global perceptions of American power. Critique of American society's mental state, noting widespread pharmaceutical use and obesity compared to other nations like Russia and China. Expresses deep concern for America's future due to perceived weaknesses in its population compared to other global powers. Military power dynamics. Emphasis on military capabilities of countries like China and Russia, highlighting their nuclear arsenals and technological advancements. Discussion on new trade agreements between China and Iran that exclude America, indicating shifts in global economic alliances away from the dollar towards gold as currency. Japan just broke the global economy, worse than Greece. Video highlights. The yen carry trade and its implications. Japan is a major creditor nation, holding trillions in US government debt. Its currency strength can impact global financial stability. The unwinding of the yen carry trade caused market volatility, affecting various asset classes, including stocks and cryptocurrencies. Current trends show a continued unwinding process leading to rising long-term interest rates and failing bond auctions. Understanding the yen carry trade mechanism. The yen carry trade involves borrowing yen at low interest rates to invest in higher-yielding assets globally. This strategy has been pivotal for investors. The global money glitch: understanding Japan's economic shift. The carry trade phenomenon. Investors borrow money in Japan at nearly zero interest rates and invest it in higher-yielding assets globally, creating a profit margin. Impacts on investment strategies. To attract buyers back into the bond market, raising interest rates became necessary. However, this action could disrupt existing carry trades. Companies like Metaplanet saw stock surges as they were perceived as hedges against potential bond market collapses amidst rising Japanese interest rates. Future outlook for governments and investors. There seems to be no viable escape from a system dependent on near-zero interest rates. Governments may struggle with tax increases or spending cuts due to political pressures. Potential outcomes include credit downgrades or currency devaluation, as governments try to maintain appearances while managing unsustainable debts. This scenario aligns with Lynn Alden's perspective that there's no stopping this economic trajectory. Hence, people are increasingly investing in Bitcoin as an alternative asset outside traditional financial systems.